Good morning, everybody. How are you all doing today? I hope you guys have had a fantastic day trading so far, and more importantly, I hope you guys have had a cautious day trading because we have to remember that the best traders are the ones that minimize the most risk. They take on the least amount of risk while hunting for high probability setups. So I'm totally ready, guys, to do lesson number 11, which is going to be common patterns in playing breakout. So cheers to you guys. This is my gigantic cup of coffee that I always have with me. Look how big it is. This is my hand. This is the cup of coffee. It probably holds enough for about two cups of coffee. So let me just have a sip and we're going to get started. All right. So it's great. It's a beautiful day finally out here today. We're finally getting some sort of 20 to 30 degrees Celsius today. That is the first time that we are actually having nice weather here in Manitoba, Canada. We just got rid of all the snow just last week. So it's always an exciting time whenever we start to get nice weather here in Manitoba, Canada, because we only get to enjoy our summers for maybe 2 or 3 months of the year. So today, guys, we're going to be talking about common patterns and playing breakouts. And it's also going to tie in to the very last video that we did as well, which is going to be what are supports, what are resistances, what are channels, and what are trend lines. So make sure that you guys brush up from lesson number 11 because lesson 11 is going to be a big one that ties in with lesson 10 as well. Oh, you guys don't even see this. My apologies. So make sure that you're brushing up on lesson number 10 right here, okay? As you guys see over here. Lesson 10 was supports, resistances, channels, and trend lines. So how are you guys enjoying the lesson so far? I made a promise to you guys that I would actually try my absolute best to avoid tons of inappropriate jokes and profanity, especially because I wanted to keep this as a very professional type of atmosphere where I feel that students would most likely have a much better time when it comes to succeeding, right? I want to make sure that it's a very conducive and safe and friendly environment where you guys have access to contacting me through questions. So make sure if you guys actually have questions that you're contacting me through Udemy, please make sure you see the question and answer section as well, because there might be a lot of the common questions that are actually answered already. So I hope that you guys have taken a lot away from these tutorials so far. I've definitely put an emphasis on making sure that you guys are very well educated, and I firmly believe that by the end of this tutorial, you guys are going to be very well equipped, okay? You're going to be very well equipped to make a lot of good decisions because the goal of these videos is to make sure that you guys are prepared for the real world. Okay, so think about it like this for a moment as well, okay? Just imagine with me for a moment where if you guys didn't even learn anything at all about trading and you actually just dove right into it instead, right? So you just dove right into trading and you didn't know anything at all about it. Now imagine how scary that would be, right? You're going to be trying to learn things for yourself. You're going to be trying to deduce things yourself. And along the way, you're actually probably going to lose a lot of money as well. Well, that's not really the most inviting type of atmosphere, right? So the money that you guys have invested in this particular course of only $200, it's a very safe way for you to learn. So think about it as learning as much as you possibly can before getting into the real world and actually wasting your money, right? You don't want to waste your money, guys. You want to be as possibly equipped as you guys actually can be. Because if you are as equipped as you possibly can be, then you're going to have a much better and higher chance at actually succeeding in the real world. Do you guys notice right here? Okay, do you guys notice right here that we are about to break the 9,200 range? Let's take a look at this together right here for Bitcoin, just so we could do a little bit more of reading level 2 action, so you guys can get a very good grasp of how the level 2s are actually handled, okay? So what we are seeing right now, guys, is we are seeing a lot of people come in to defend at the 9,200 range, right? 9,200 range is where people are starting to defend, right? So we see a lot of people rushing in right now, but is it actually going to hold? This is a pretty decent wall right here, okay? This is a $3.5 million wall that is right here. So for every 100 Bitcoin, that's about $1 million. So we see people slowly buying at the 203 range right here. Bulls are definitely trying to pick it up, but we see more of the bears just trying to shatter this particular support right now. As you guys notice right here, right? We see a lot of the algorithms are just slowly selling off. Is this actually going to hold? The 1 minute chart probably just took a nosedive right now, as you guys saw. We literally dove $130 in the very short span of just a few seconds. We see the algorithms. If you guys ever see 54, 55, 56, 57, 58, 59, on 5 minutes there, right? 501, 502, 503, 504, 505, 506, 507, 508, 509. Okay, 509, 510, 511, 512, 513, 514, 515, 516. That's how you know, because it's actually spamming every single second, that it's actually not just typical retail investors like you and I. That's how we know that they are actually algorithms that are kicking in to start purchasing, right? So if you guys notice, every single RSI right now is incredibly low right now. So this is actually a fairly good time to be day trading, and I'll most likely end up day trading in front of you guys as well. So this one should actually be on Litecoin here. My apologies. Okay, actually this one should be on Ripple. My mistake. Let's make sure that we're on the right time frames. I want to make sure that you guys get as much content as possible. And the stuff that I'm talking about in here with you guys is actually not going to be, guys. It is not, once again, I repeat, it is not going to be in anywhere else, okay? It is only going to be exclusive information for you guys. So now let's talk about supports, resistances, and a breakout strategy, okay? So what is a breakout strategy? Okay, a breakout is when we actually get above a specific resistance. Once we get above a specific resistance, it will actually end up breaking out. And what we want to focus on is how to actually play a breakout strategy, right? So these are very common things that are important and very much so necessary to understand. In the next episode, or sorry, in the next lesson, we'll be talking about what are moving averages. So this particular lesson, we're going to talk about patterns first, okay? So let's get into some of the most common patterns. Some of the most common patterns that you guys most likely know are probably these three right here, okay? Can anybody name what this pattern is right here, okay? There are three different types that you guys are most likely familiar with, okay? That's one right there. This is the second one. And this is actually the third one right here, okay? Right there. Can you guys actually name these particular patterns right here? Okay, try your best to name them. If you can't, please don't worry too much about it, because we're going to make sure that you guys are very well versed with patterns by the time we are actually done this right here, okay? So can you guys please try your best to name it? Don't worry, once again, if you guys can't actually name it, not a worry at all. Okay, so this one here is called a symmetric triangle, okay? A symmetric triangle. This one here is called an ascending triangle. This one here is called a descending triangle. Notice that this symmetric triangle has two sloped lines. Remember how we were talking about how resistances and supports can also be not just horizontal like that, but it can also be sloped as well. Notice how this one here has two converging lines that end up meeting somewhere, right? This particular point right here, guys, that I'm about to highlight in yellow for you is called an apex, okay? I'm going to label it for you guys as well. That is called the apex right here, okay? This is called the apex as well, right over here, right? And this right here is called the apex as well. It is where two converging lines meet, right? They don't necessarily always get to the apex, but there's a very strong chance that it's going to get to the apex, right? So we don't bank on it getting there, but there's a strong chance that it gets there, especially for these symmetric triangles. We always have to think about it from the perspective of supply and demand, okay? Supply and demand. And whenever for example, this symmetric triangle right here, when it gets to where these lines are meeting is where supply will meet demand and demand will meet supply. The bulls and the bears are actually fighting with each other. And because they're always fighting with each other, eventually one of them will give up, right? Maybe one of them will be like, "Hey, you know what? We give up. There's just too much pressure from the other side." Because think of it like a tug of war, right? It's gonna, once they're always fighting each other back and forth, back and forth, back and forth, right? Or they're always fighting, in this case, trying to go up and down, up and down. The bulls, they want to raise the price for it to go up. And the bears, they want the price to go down because they want cheaper coins, right? So both of them profit in different ways. The bears might be shorting the market where they're betting against the market so that it'll actually go down. And the bulls will want to sorry, I meant the bears if I said the bulls earlier. They want to short the market to get cheaper coins, or they are betting against the market where it's actually going to go down and they profit on the downtrend. So think of it like this, okay? Think of it like this, okay? The bears want to push down, okay? The bears, they keep wanting to push down, right? I'm just going to delete the apex part now that you guys probably have a good grasp on the actual name. So apex is a place where 2 points meet, right? Just like in normal English. So when we actually, I didn't really know what the word apex meant before, like believe it or not. Okay, so don't be embarrassed in any way if you guys don't know a lot of the terminologies. So the bears, they keep wanting to push down, right? But guess what the bulls want to do? The bulls want to push up, okay? The bulls want to push up like that. And eventually, one of them is going to win when it gets closer and closer to these converging lines where the apex is. And sometimes, right, sometimes the bulls will win and they'll go upwards. Sometimes the bears will win and it will go down like that. Now, this one is very tricky to play. The way that we play these is like this, okay? And I'm going to actually show you guys a way of gauging where targets could be. So what we do is, let's say, we're seeing some lines like this, just as an example. I'm just going to draw some basic lines in here like that, okay? So let's say that we see it bounce like that inside of there. So the way that we look at it is we draw a target inside of the box, okay? And we say to ourselves, if it goes up, it can go that amount, okay? If it goes down, it can go this amount, like that. So that is how we're gauging the target, right? So this is a really good way of gauging a target. So whichever way it ends up breaking, now it doesn't need to be there. It could actually break out over here. It could break out over here. We never know. So we're going to use the width, or sorry, the height of the actual triangle as a basic gauge. And I'm going to show you guys a really, really crazy example of how we can actually use this in a real life example of how this is actually gauged as a specific target, okay? Then eventually what people do is they play the breakout, okay? If it goes upwards, they buy it on the breakout, right? So they'll buy it on the breakout as an example right here, okay? And wherever this distance is, so just, we'll just say it was about $144 there, right? So if it breaks upwards, then what you want to do is you want to buy it as it breaks upwards and use that as a target. And the way that you do that is you would go long on the breakout. You would set your stop loss slightly below the actual support line, okay? Slightly below the support line. And then you set your target for slightly above it over there, right? You set your target for there, and you have a beautiful risk to reward ratio of 3.17, which means that you have a chance to win 3.17 times more than you actually lose, okay? So that's a great way to look at it, phenomenal way to look at it. But then if it actually went down, guys, okay? If it went down, right? So we would actually be looking at it on the downside. Let's just say that the bulls didn't actually win. So let's say that you could not actually short the market, okay? You guys don't have the capacity to short the market because you don't play on an exchange, or even if you do have the capacity to short the market, right? If it actually broke down, then you would short it on the breakout down because now the bulls actually ended up winning. And then, but if you don't short it, right? Or okay, let's say that you did short it first, okay? You set your stop loss for slightly above the resistance, right? And then you target the width of the actual triangle down there. So then you get the same risk to reward ratio on the downside if you shorted it. If you did not short it, then what you would actually do is you would wait until it hits roughly the target down there, and that's where you actually buy it. Okay, let me give you guys a crazy example on EOS. Just as an example, we're going to go to a 4-hour chart right over here. Okay, this is how I was able to make a really good amount of money on EOS, okay? And you guys are going to be absolutely blown away by how accurate this is. So we're looking at EOS right here, okay? So the first thing we'll do is we're going to try to draw some lines that actually end up connecting, right? So let's just take a look at it right here. Okay, this is a little bit off, so let me just expand it so you guys can see it very clearly. So we're gonna draw a triangle that basically connects a lot of these points, right? So this connects a lot of these points here, as you guys can see, right? And then we'll draw it on the bottom side as well, just to connect a lot of these points, right? For this one, I most likely would want to draw it like that, just to connect it, right? So we're connecting basically all of these points right there, okay? And also perhaps right there as well, just slightly, okay? So now I'm going to draw a box inside of this right over here, okay? I'm going to draw a box roughly inside of there, as you guys can see, right? So that is the width of the actual box, right? That's the width of the box. I can probably draw it a little bit better, in my opinion. This can probably be a little bit bigger as well, I'm guessing, okay? I'll draw it roughly just like that. This seems to be fairly accurate, right? And now I'm going to drag this over to where it pretty much broke down, okay? And then I'm just going to draw a line, like simply like that, right? So this is the width, or sorry, I keep saying the width, the height of the triangle, right? This is a symmetric triangle that's squeezing where we're getting a lot of relevant points. It's probably a little bit better like that, I'm guessing. There we go, just something like that. So this one's $1.2311, $1.2311. And look at how accurate it is, guys, okay? So just to give you guys a really, really clear-cut example, look at the accuracy of where it actually trended for a long period of time. So that's just another really accurate way of getting a symmetric triangle. Now, another really awesome symmetric triangle that happened on EOS is this one right here, okay? So what we do is we wait for a breakout, okay? We basically wait for a breakout that's going to happen one way or the other. So when we draw it, we try to draw it as best as we possibly can, and just don't include the wicks though, because we more so consider those bull trapped regions, okay? So this is a really good way of drawing it right there, where we're just getting as best as we possibly can, right? That looks pretty good to you guys? What do you think right there? So now what we want to do, remember this, okay guys, we want to play it on the breakout. So we take the width, or the, I keep saying width, the height of the triangle, just kind of like that right there, and we use it as a first general target, right, of where it is. And as you guys can see, it hit target very well. Not only did it hit target, but it highly exceeded the target, right? Highly exceeded the target, and that happens often. So what you want to do is you want to be very patient and just wait, okay? You guys want to make sure that you're waiting for these symmetric triangles, right? And then if it breaks upwards, that's where you buy it, right? And then you use your target box roughly, something like that, okay, as your actual target. And then you use your risk to reward like that. You take your stop loss, you put it slightly below the triangle support, and then you target roughly around there. And this one right here actually made a 40% gain, which was a massive number. I was actually doing technical analysis for EOS for a very long time, guys. I've been trading EOS since 50 cents, okay? I've been trading EOS since 50 cents, and it's definitely one of my favorite coins to trade. Now, let's go over another really good coin, or sorry, another really good pattern, okay? While we're here, let me show you guys a pattern right here that it possibly makes, right? and I'll go over in high detail the rest of the triangles. So sometimes we have something called a flag, okay? We have a flag where it goes up really high, and just think of like any other flag, like this, okay? Like that, right? And then inside of here, it makes, it consolidates in kind of like a channel, right? In a channel. And this is actually a very bullish pattern, okay? It's a very bullish pattern because what we do is we assume that when it actually breaks out, it will actually go the same distance and make a continuation pattern of the flag, okay? That's what it normally does. So it goes upwards, makes a channel like this right here, and then what you want to do is you actually want to buy the breakout of the flag, right? You wait till it breaks this resistance right there. Okay. You set your stop loss. Well, that's really big there. I don't know why it got so big. Okay, you set your stop loss, okay? Set your stop loss slightly below it. Does that make sense so far, guys? You set your stop loss. I don't know what just happened there. Sorry about that. I'm not sure. I have no idea what just happened. Okay, you set your stop loss for slightly below. Actually, you set it below, keep in mind, right? Below this particular one right there, and you actually go for the exact same magnitude as this one. Hold down control, drag it and drop it so you can get that specific target. And now you got a really nice risk to reward of about 2.72. Now let's see if this actually holds up, okay? So you got a really nice flag in here, right? That pretty much makes a flag pull. It broke out right here from the symmetric triangle first, right? It broke out right there. And then what we're actually getting is that exact same type of flagpole that I was illustrating for you guys earlier. Do you see it right here? Isn't that crazy? Okay, we get this type of flagpole, right? Where it's consolidating very nicely in this flag type of pattern, right? Sometimes they're not always pretty. Sometimes they can be a little bit sloped. Sometimes they can be slanted, right? They can be very different, but nevertheless, that is a flag. So what you want to do is you want to buy it on the breakout, right? You want to first of all buy it on the breakout there. That's a little bit large again. So let me just adjust this for you guys. Okay, you want to buy it on the breakout, and what you want to do is actually target right here, okay? You want to target where the top of that flag is, right? Just right around there. Set your stop loss slightly below the support, okay? Always below the support, never below the resistance there. Always go below the support. And what do you guys know, okay? This actually made me a few $10,000 on this trade because, guys, I just follow the same patterns over and over and over and over again. And that's exactly what ended up happening, okay? It was a really beautiful trade to make, I have to admit. So those were some really amazing patterns for it to make. And I was incredibly grateful that I was actually able to find that particular pattern right there, okay? So let's go over now some other coins some other patterns like ascending triangle, okay? So we want to wrap up some of the triangles here, and triangles are really easy patterns to play, guys. So we talked about the symmetric triangle that could actually break up. I showed you from EOS where it actually broke down, right? So it can break up or it can break down, and it's very unpredictable which way it breaks. But what we like to do is we like to be extremely patient and just simply wait to see which way it breaks, and then that's when we play it, okay, guys? Now, the better pattern to play are these ones right here. This is called an ascending triangle, okay? Ascending triangles have great characteristics, okay? It has a series of higher lows, okay? But it has the same series of the same highs, okay? Because now we're think of it like a ceiling, okay? Think of it like a ceiling, and every time we're punching it, we're punching it, we're punching it, and we're trying to break the ceiling. But every time, okay, we actually land higher, right? So eventually what happens is we try really hard to break it many times, and eventually it breaks, right? Because the ceiling simply can't hold anymore. So whenever you see an ascending triangle, it's actually a really, really good pattern to play because there's a high probability of it actually breaking upwards. Now let's talk about some other ones, okay? Like a descending triangle, which is basically the opposite of an ascending triangle, right? So now we have a descending triangle and we ask ourselves, okay, well, how many times, okay, it's gonna pound at it, right? It's gonna try to pound at it, pound on the ground there. How many times can the bears keep pounding at it until it actually just breaks down, right? So it can only hold for so long. So let me give you guys an example, first of all, of a pattern that was an ascending triangle, but it actually ended up failing. Because I just want to make sure that you guys really, really understand that sometimes we actually get ascending triangles that fail, okay? So do you guys see the pattern here already? Check it out, okay? This is an ascending triangle that simply failed to materialize and it wasn't a good trade at all. Remember how in the past few videos I've been talking about throwovers, okay? Throwovers happen when the bulls basically end up pushing it up just a little bit, right? But everybody actually ends up getting trapped instead, okay? They end up getting trapped instead, and there's simply just no way to recover from it. So notice here, just to give you guys clear-cut examples, we're pounding at it, right? We're pushing it higher and higher, right? Pushing it higher and higher. Finally, we broke through it. But unfortunately, it just simply was not strong enough, okay? So let me give you an example where it actually does break up for an ascending triangle, okay? Look at this right here, right? Sometimes these patterns are hard to spot, but once you actually play with them enough, and see it enough, they become very common and second nature, okay? So that would be an example of an ascending triangle now, right? Take a look right there. You see it kind of pound at the top a few times. It wasn't really successful sometimes, right? It wasn't really successful sometimes. So the way that you would actually play this ascending triangle, right? So I'm just going to show you. It touched the bottom there, touched the bottom there, touched the bottom there. Tries to pound at it there, tries to pound at it there, tries to pound at it there, right? And it didn't succeed. So the breakout strategy that you would actually use is right here, okay? You would make note of this particular high, right? That particular high there. And then when you actually break through it, for ascending triangles, when you actually break through them, the resistance now becomes a support. Okay, that's really important to understand. We usually try to pound at the ceiling or the resistance 3 times. Okay, we pound at it 3 times until it finally does break. Now, your buy-in price and your entry would be when it finally breaks it. And you can actually set your stop loss, okay, just slightly below it right there, right? And a really good general target would also be the width of the triangle, okay? You can use the width of the triangle right there. So that's a pretty good gauge right here, okay? Just drag it over here, and we use this as a target. And as you guys can see, that would have yielded you a 42% yield. And this was one that I played heavily, and I know my really good friend Eric Cho, that I'm sure that you guys all know who Eric Cho is. Him and I played this very well, and I remember us tweeting about it quite often as a team. So this was a really good target, guys, with an awesome risk to reward ratio of 4.31. Now let's try to look at some other patterns, okay? Oh, by the way, while we're here, okay, we're going to take a look at some other patterns as well. For example, this is a flag, okay? This is definitely like a flag pattern that you guys are seeing. This is the flag pole right there as well, right? That's the flag pole. Okay, now it didn't actually get to the targets that we wanted it to get to, right? But you know what? Nevertheless, it is a flag pattern that you guys are sort of seeing right there, where it ended up breaking out. Or if that wasn't the flag pattern, then perhaps this is also a flag pattern, okay? You guys see this right there, where it's coming down. So whenever you guys see like a channel that's sloping like that after it goes really high upwards, there's a really good chance that it's actually going to break out of it and go upwards and continue the pattern, right? Because these flags are actually continuation patterns. Now let me show you guys a pattern of a descending triangle, okay? So if you guys notice the slopes here, that's clearly sloping downwards, right? If we take the high of this previous price right here, and then we take this right here, right? What we see is that it's trying to pound at it, definitely, right? We can actually go all the way further back, right? So it tried to break it right there, tried to break it right there. It didn't actually go up that high afterwards, right? Tried to pound at it there, tried to pound at it there, and eventually it just shatters. So this is a really good example of how a support doesn't always hold sometimes, okay? And let me show you guys something called an inverted flag. Remember how we were talking about how flag patterns, okay? Flag patterns are basically like this and they're continuation patterns, okay? Well, the opposite also holds true, where if this were to go up like that, then the opposite actually holds true as well on a downtrend, okay? So on a downtrend, if we actually see a flag like that, this is called an inverted flag, okay? Then there's usually going to be a pattern like that that ends up breaking downwards like this, okay? So let me give you guys a really clear example of where it actually ended up doing something like that. Now, the targets are only general targets, and they don't always guarantee that it's going to reach those targets. But would you guys agree with me right here that this is basically an inverted flag, right? This is an inverted flag where it's making touches like that. It goes up one, two, three, four, and usually it makes almost a 4.5 touches, right? That we count that as the fifth one. And then as soon as it makes this channel, right, it continues on its path down like that. Okay, continues on its path down. It didn't exactly get to that level there at that specific time, right? Not that low at least, but it definitely got to fairly close to those targets. But if I actually went from all the way up here, okay, if I went from the breakout down from up there, look at how actually accurate that is, guys, okay? Look how accurate this is right there, where it actually pretty much nailed it in terms of accuracy for that. So this is a really good example of how we can use targets according to some patterns that we play. So I hope you guys have a really good grasp of ascending triangles, descending triangles, flags, and symmetric triangles especially as well. So what are some other patterns that are incredibly common for us to play, okay? Let's look at some patterns such as a head and shoulders pattern. I'm sure you guys have all heard of head and shoulders pattern, right? And let's also look at cup and handle patterns as well, okay? Let's go to a daily chart, right? Let's go to a daily chart. And if you guys notice right here, okay, so the thing about cup and handle patterns is that they like to retrace a very small amount, right? About 382. So let me give you guys a really good example of what a cup and handle is, okay? So a cup and handle, for example, does something like this, okay? There's basically a handle, right? And then it comes down and it looks just like a cup, like that, okay? And then there's a spout, right? Or sorry, that's the spout. And this is basically the handle right here, okay? There's a handle that comes downwards. And then after it does that, it actually continues to skyrocket going upwards like that, okay? So this is basically exactly what a cup and handle implies. And the volume is actually going to look like a cup and handle as well. So let me give you guys a really good example on EOS, okay? Where this was a phenomenal example where we get, something like that, right? That's the spout or whatever, okay? And then it comes down, it comes down, it comes down, it comes down, and then it goes up. So we have to remember that this line is usually where the spout and the handle is, okay? So there's a spout somewhere there. It comes downwards like this, comes down, and it goes up right there. And the handle comes down about 382 Fibonacci level. Okay, so if you guys know your fibs yet, which we haven't gone over, so it goes down to roughly 382. I drew this a little bit prematurely. So it'll actually end up going like that, comes down like that, okay? And then it goes to about the 382 Fibonacci range, and then it continues going upwards. So let's see if we can actually see a cup and handle pattern here. So here's where it comes down, and then here's where it actually continues to go up, right? And the way that we measure it is like this, okay? We measure, first of all, let's see if this actually fits our profile of about 382. We take the fib from the bottom, we go up to where it actually pretty much started to downtrend, right? Oh, sorry, I actually didn't go high enough. And we see it hits right about the 382. And how do we measure the target? A lot of people will play the breakout, right? They'll play the breakout like this when it actually breaks above it, right? That's where they play the breakout. They put their stop loss slightly here. And what they'll do is they'll target the whole height of the cup, okay? The whole height of the cup, that's right. And then they'll put their target above the breakout right here. And that's where the first general target actually hit, if you guys notice right there, before we found some resistance, right? So these are very, very clear-cut examples of cup and handles. So let's look at what a head and shoulders pattern is now, okay? Head and shoulders are much more difficult to play, to be quite honest, okay? Much, much more difficult to play, but they can nevertheless still be played. So let's look at EOS right here, okay? Let's look at EOS, just something like that. Okay, so what a cup and handle or sorry, a head and shoulders is you can actually draw the head and shoulders like this. Okay, you have a left shoulder, then you have a, just imagine a person with a left shoulder, and then you have his head, right, just like that. Okay, and then you have his right shoulder. Now this can be any height. This can be any height up to the head, but not quite. Okay, it's got to be lower than the head. The left shoulder has got to be lower than the head as well. Okay, make sure that that's a very important distinguishment. So what people call this is the neckline, right? This is where the neck is with your head and your shoulders. So what people do is they wait until it actually gets to this specific point right here. Sometimes it bounces, right? And what people like to do is they take the distance of the head. So if it actually breaks down upon the neckline, you can short it, for example. Okay, you can short it and target down here. Or you can actually wait until it gets closer to there so you can buy to go long. But sometimes it's actually going to go up, right? And it doesn't actually bounce there. So then if it doesn't bounce there, then we simply go to right here and then we target the neckline, and then we simply just go long with our stop loss slightly below it, just like that, okay? And then we target going upwards with a beautiful risk to reward ratio there. So let me show you guys some specific examples on EOS, for example, here, okay? So first of all, we have to establish, okay? We got to make sure that we establish, and don't worry guys, we're going to go over so many more examples in all of the lessons coming up, because now we're actually starting to get serious, right? Before they were more so introductory type of classes, but now guys, we're getting very, very serious about Bitcoin or about just trading in general, okay? So what we see here is we start to see the left shoulder form, right? That's the left shoulder form right there. We see the head basically form up all the way up to there, right? And we see it coming down there. And then we see the shoulder pretty much form just like that, okay? So this one I'm going to draw it a little bit better. Does that make sense to you guys, right? So what people do is they basically target, okay? They target the about the height of the head, just as a general guideline. And then when it breaks down, they put their target roughly down over here, right? Now, it never actually got that far, right? But nevertheless, it was a general guideline of what we use. So that is basically what we call a cup and handle pattern. And, sorry, a head and shoulders pattern right there. Let me show you guys, just as an example as well, how accurate a flag can actually be, okay? So the flag here started right around there. I'm sure we can all agree on that. And here's kind of like the very, very, very long flag itself that extended pretty far, right? So what you guys want to do is when it breaks out, you want to buy on the breakout, right? Always buy above the breakout, right? So that's how we like to do it. And then let's say we hold down control, click on the flagpole, extend it out to the breakout, and look how accurate this actually was, right? Super accurate all the time. That is quite amazing. So that's a really good example as well of where we were actually using flags, okay? So let me show you guys a lot more actually. Let's talk about more patterns as well, okay? So I also want to talk about double tops and double bottoms as well, okay? I'm sure you guys have seen this pattern before where it goes like that, okay? And then it actually ends up reversing like that heavily. and we end up getting a double top, right? That is called an M formation. So if you guys see these M formations that happen, it happens all the time. You're going to see a fairly heavy reversal. And this one is called a W, okay? Let me show you guys a W. And what do you guys think another name for this would be, huh? This would be a double bottom, right? So double bottoms definitely happen quite often as well. And something we always have to remember, guys, is that if there's a flag like this, okay, and it happens like that, it's a continuation pattern to go up like that. But if it's the other way, for example, okay, let's say it's going down like that, okay, something like that, then this is usually a continuation pattern to go down like that, okay? And a lot of the times as well, if you guys are seeing something like any type of symmetric triangle, it could really go either way. Even ascending triangles, it can really go either way as well. Okay, guys? So I'm just trying to look at other patterns that we can talk about here as well. My favorite thing to do, guys, is actually play a breakout. It's one of the most emphasized trading strategies that I actually always recommend to people, okay? And the simple breakout strategy is that you enter on confirmation, confirmation, confirmation. It's really important to get this confirmation before we enter a trade. Otherwise, you actually risk losing a lot of money, right? And that's the last thing that I want you guys to do. So for example, on Bitcoin, we can honestly look on any time frame, okay? Let's say we go even farther back over here. Let's say we look at here. First thing that you do, step one, is identify the resistance, right? So if you look at it very closely here, what pattern do you guys see? You see an ascending triangle, right? You see an ascending triangle, and be consistent with the way you guys are drawing your lines, okay? If you're going to draw it from wick to wick, make sure it's wick to wick on the resistance and support, okay? I personally like to draw it from body to body, and the reason why I draw it from body to body is because I like to consider some of the wicked regions as a bull trap or a bear trapped region, right? So I like to draw mine kind of like that because I consider the wicks as bear trapped regions, right? So if you guys notice, and when you guys also draw it, right? Draw your lines in like that and make sure that your triangle tool is starred. And once it's starred, okay, you can draw your line very easily and you can actually identify the shape, right? So then identify where the resistance is, right? Identify where the resistance is. And as soon as it actually breaks, I would probably have chosen right there, the top of the wick, right? Just to be safe, okay? And then once you do that, you basically choose the distance of the height, the height of the triangle, right? If it breaks out, you're going to say, wow, could it actually hit there? Could it actually hit there? And you enter like that. You set your stop loss below the support. Just keep that in mind. You guys can actually go below the resistance if you want, because now it becomes a support. I know I'm breaking some rules, or you can allocate it to much lower to the support line. And then you actually target right over here the same distance as the distance of the wedge, right? The height of it right there. And that actually hit it with flying colors, right? If you guys notice. So that was kind of cool. And then you take your target, right? You take your profit rather. I'm just going to go to a different time frame here. Actually, the daily was fine, right? And then the same way, if you guys took your profit there, you wait again for a breakout. We'll just say right around here, right? That some of the region was bull trap. We make sure as well, guys, that on a confirmation, make sure that there's volume, okay? Make sure there's volume. You don't want to enter a trade without volume, guys. Make sure there's tons of volume. Make sure that you're waiting for that confirmation with volume, right? And once you get that volume picking up, that's where you can enter the trade as well, okay? So here, if you guys notice, you'd want to definitely buy it on the breakout, right? Buy it on the breakout. Here, it was reaching new highs, so we didn't really have any targets, to be quite honest. So set your stop loss slightly below it. Aim for at least a 3-to-1 risk to reward ratio just to be safe sometimes when you don't really have any targets. And there you go. You end up breaking it easily as well, right? So here, guys, here as well, if you guys notice, there was a big lull. Here was the all-time high at 49.70, right? 49.70. As it inched closer and closer and closer, we actually for this one have an ascending triangle, as you guys can see this right here, right? This is an ascending triangle. So what's the breakout strategy, guys? You wait for volume to pick up. Here's volume picking up. Here's volume really picking up right there. So what you do is you take the distance of the triangle, just generally speaking, you carry it over here, right? On the breakout, and then you also go into a long position on the breakout. Set your stop loss, really up to you guys where it is. You can set it below the resistance, which now becomes a support, or you can set it below the former support, and then you target the distance of the wedge. And here you would have made a really nice gain because it hit target with flying colors, right? That was really awesome. And here as well, if you guys notice, right? Just take a look here with me for a few moments. Here we're having a lot of trouble breaking it, right? So people are then here we're reaching new territories, so there's really no targets, right, guys? You just gotta ride as long as you can. Go for at least a 3-to-1 risk to reward ratio. As soon as it breaks this high, enter a trade, set your stop loss below the resistance, which now becomes a support, right? Just slightly below probably the last few candles. Go for at least a 3-to-1 risk to reward ratio. And guys, that's how I played all of pretty much that month. It was like, well, I didn't work that much that month. I didn't really trade a lot, but I'm talking like early December. It was like really profitable, guys. And I barely traded near the middle of December and late December because I took a break. Yeah, super profitable, guys. So now if we actually look at Bitcoin, right, we're going to say to ourselves, well, guys, right around here, 98.61 to almost about 10K, this region right here is actually going to be our resistance, right? So if we actually break it, what we would want to do is target probably the previous high, which is around $11,788, right? So if we finally broke it, what would you guys do? Yeah, you'd enter a trade, you set your stop loss slightly below it, right? Below the resistance, which now becomes a support, and you target the previous high, which was about $11,788. And that's a really good risk to reward ratio of 19.3. So in this episode so far, or this lesson, we've gone over triangles, we've gone over symmetric triangles, we've gone over ascending triangles, descending triangles, head and shoulders, cup and handles. We've gone over the pennants are basically the same thing as like a symmetric triangle, you can say as well, right? Yeah, so we've got over pretty much the majority of all the common patterns. But what do all things have in common that we've been talking about this episode so far, guys? What do you think the commonality is? The commonality would probably be to buy on the breakout, right? So we want to first of all establish where the resistance is, establish where the support is. If it breaks above the resistance, right? If it breaks above the resistance, that's where we buy. And the fourth thing is we set our stop loss below either the former resistance that now becomes the support, right? Or below the previous support. But the most important thing, guys, is to enter on confirmation as well. Wait for the volume to pick up. Once you guys wait for the volume to pick up, that's where you're going to be able to increase your probability of being in a much more successful trade. So the breakout strategy, guys, I kid you not, it is such a profitable strategy, okay? You guys can do it on any time frame that you want, right? So let's say we played it on a 5-minute time frame. Actually, let's go to like a 2-hour time frame here first, okay? Let's, for example, look right here, okay? Here was always go for the high of the previous resistance that we're in. So here, for example, was right there, right? That was clearly right there. I'm sure you guys would all agree. The next target would have been around here in this range, around 9,700, right? So as soon as it broke roughly around this region with a lot of volume, guys, you guys see this candle with a lot of volume? That's where you enter a trade, right? You enter the trade there. You set your stop loss slightly below it. below all of them, guys. Okay, don't just not just below the resistance, but be generous sometimes. Here, I would have set it for right around there. I would have targeted the previous highs, like even all the way back there, or I would have targeted right here as well. And you still get yourself a really nice 2.7 risk to reward ratio. And in this one, all the way up there, guys, we get a 5.54 risk to reward ratio. Do you guys want to see it from the shorting perspective? Okay, I'll show you guys it from the shorting perspective since all we've talked about is going long so far. Okay, let's talk about it from going on the downside now. Okay, so on the downside, for the people that are interested in shorting, it's almost the same thing, right? So once we actually set a target, for example, right here, okay, that would be one of the floors. Right here would be one of the floors. We're going to not only look for the best case scenario, we're going to talk about this one right there, right? So what we do is the moment that it breaks this support right there, that is where we would like to enter a short position, right? And we set our stop loss for higher than where that particular region's high was, right? That's how we actually play it like that. And there's a lot of things that we can use. We can talk about Fibonacci, okay? We can talk about Fibonacci extensions, just going like that, right? And then we can target, if you guys don't, we'll get to that. Trust me, guys. You can target the one-to-one level, which is a perfect extension for a short. And then you can also target the 161.8, which is a perfect extension to short as well. So shorting, guys, when it breaks a particular floor, that is where it could be a very good opportunity for you to short, right? So for example, right here, okay, if it actually broke there, you'd go all the way back to around here and you'd be like, okay, well, this is a pretty decent area of support, just kind of down over here, right? Because we're taking the previous price activity or even higher because we're unsure, right? So that's a pretty good, decent support level. Okay, or even right around here, we can say, okay, if we're not that cautious, or if we're extremely cautious, we can say, okay, this was a previous support area. So if it actually broke this particular support right there, then what you would do is you would actually enter a short position, set your stop loss slightly higher than it this time because there's not really a lot of different highs there, and target there, and you would have actually made a 4.8% gain. So guys, what we want to do once again is we want to look for a lot of confluent reasons to enter a trade, right? We want to look for high probability setups. So now that you guys completely understand candlestick analysis, right? Candlestick analysis, and then you combine it with the patterns that you guys are familiar with already, or a little bit of the patterns. We'll get to a lot more advanced ones down the road. And you guys combine it with, for example, trading breakouts as well. And then when you combine it with RSI and MACD, you guys are gonna have some deadly weapons. Have you guys noticed what I've basically done? I'm just outlining all the possible skills that you can actually have. So the goal is to have as many possible skills as possible, and some of these skills are actually better used in different situations, right? So some skills or some abilities, think of it like a video game. Some video games are actually going to do a lot better, right? Or some skills in the video game will be used better at different times. So I'm trying to arm you guys with a bunch of different technical analysis abilities and skills so that sometimes you might want to play a breakout. Sometimes you might want to do candlestick analysis. Sometimes you might want to do something like patterns. Sometimes you want to do something like using RSI. Sometimes you want to use MACD. So we try to find on every single time frame things that can be confluent. And once they are confluent, and you might find, oh yeah, wow, the RSI is actually showing it's going to go up. Wow, the candlesticks are finding support. Wow, it's actually in a really bullish ascending triangle pattern. Wow, the MACD is actually going up as well. Is that just 4 reasons, right? We just found basically 4 reasons why it's leaning more towards going up than actually going down. So we have to always remember, guys, that trading is a game of probability. And what we want to do is focus on finding more reasons for it to lean one particular direction more than another direction. And as you guys get this experience under your belt, always make sure that you're playing with very, very, very small amounts. Okay, guys? You're playing with very, very small amounts to make sure that you've got these lessons under your belt, because these lessons don't really need to be expensive whatsoever. They can actually be very cheap, and the main goal, guys, is to make sure that you are learning. Okay, keep your lessons, guys, really cheap. Please don't spend a lot of money trading, and please never, ever, ever think, Luna, this is the Philicon show. Okay, Luna, you need to understand, Luna, that this is the Philicon show, and you're not allowed in this particular lesson. All right, that might be the first. Luna, we just talked about this. That might have been the only joke that I have actually made, right? In the entire 11 lessons, that might have actually been literally the only joke that I've ever made, because I'm trying to keep this in a serious tone. I respect your guys' time. I respect that you guys are paying for this course. I respect the fact that you guys are contributing and helping me more than you guys actually know, believe it or not. You're helping me more than you guys know as well, okay? So I want to make sure that we're always going to set the tone for a very professional type of manner. So once again, guys, never think you need to play a lot to make more money. Always make sure that you're actually focusing on good trades first, okay? Once you focus on good trades, the rest is actually going to come. So I hope that these lessons are absolutely helping you guys. So this is going to wrap up our lesson 11, which covers common patterns and playing breakouts. And the next one, guys, is actually my absolute favorite topic of all time, other than RSI. Oh, actually, I do like MACD as well. Oh, wow, I do like Fibonacci retrace. Okay, guys, the next 5 lessons, 12, 13, 14, 15, and 16, are probably going to be intense lessons, guys. And you guys are going to take so much away from this, because I know that I'm going to be just as enthusiastic making these videos. I sincerely and genuinely hope that you guys are taking so much away from these videos, because my goal, guys, I just want to see you guys kill the market, to be honest, okay? I want to hear awesome success stories of you guys just destroying the market, okay? Because I seriously, seriously need to pass on these skills that I've obtained. As you guys know and probably think, I'm a really good trader. It comes with a lot of hard work, guys, okay? But you know what? I want to see you guys have these natural skills as well. I want to see you guys change your life. I want to see you guys subsidize your income. I want to see you guys make a lot more to be happier in general. And always remember that, guys, that it's not the money that we're after, right? It's about the good trades. And money doesn't make us happier, guys. Remember that, okay? Money doesn't make us happier at all. Right now, I'm doing okay, right? But even when I wasn't doing okay and I was a poor student, I think that I was actually just as happy, right? Because what makes me truly happy is knowing that other people have actually succeeded. So please, guys, make sure you're taking a lot away from these lessons. And I'm so grateful that you guys are part of my class. And I will see you guys for lesson 12, where we will be talking about moving averages and identifying a bull or a bear market. Moving averages, guys, this is going to be the one. This is going to be the one that's going to be your money maker. If you are a swing trader, you do not want to miss this class, guys. If you are a swing trader or you're a student, you don't have a lot of time to trade. If you're a mom or a dad and you have kids to attend to, can not attend to, but you have, family to take care of, right? You guys are gonna find that this swings. You guys hear Luna? She's just barking right now and she's howling and really needs to go outside. So if you guys are, a parent and you're finding that you can only make 1 or 2 trades a day, or sorry, not a day, but a week, perhaps. If you have a full-time job or a part-time job and you can only make 1 or 2 trades a day, a week, I keep saying a day, you guys are going to find my swing trading strategy, one of the most powerful strategies with moving averages that you guys will ever come across, because I kid you not that it has made me such a good amount of money, and there's not a lot of people, guys, that talk about this strategy that I'm about to teach you guys in lesson 12. So stay tuned. I had a pleasure teaching you guys for lesson 11, and I will see you guys for lesson 12, and I hope you guys have a fantastic day. Bye now. Take care.